Hey everyone, I hope you guys are doing well. Today we're looking into InMode. What this company basically does is it designs, develops, manufactures, and commercializes surgical, aesthetic, and medical treatment solutions. And you can see from the stock price that it lost about 75% of its value from its all-time high. And I think that we're at the point where the stock is actually oversold and it doesn't follow what the fundamentals are telling us. And we're going to see about this right now. Now, if you look at the growth of the company, we can see that from the past year, the revenue has been increasing about 64%. The net income, the free cash flow, and the book value have all been increasing at very, very fast rates. Okay, so this is clearly a fast growing company, but to go more into details, let's see how consistent this growth is. So here we can see that the revenue since 2017 to 2022, you can see from the chart how nicely it's been growing consistently. And if you calculate the compounded annual growth rate over these past 5 years, we get about 48%. So this is really fast growth over 5 years. Now, if you look now at the operating cash flow, we can see the same thing. It's also following this kind of consistency with a compounded annual growth rate of almost 66%. This is really serious growth, guys, and it's also consistent, and the consistent part is what I really like to see. Alright, if you now look at the profitability of the business, we can see that the gross margin is almost 85%, operating margin 46%, net margin 44%, free cash flow margin almost 48%, and the cash conversion is at almost 106%, which is really good. Now for the returns, we can also see that they're pretty good. Return on invested capital 55%, return on equity 42%, and return on assets 36.5%. These are really good returns. What this tells us is that the company is highly profitable and they know how to invest their money and bring back returns on their investments. So these are really good things to see. Alright, if you now look at the financial health, we can see right away that the company has a current ratio of 9.13, which means that in short term, the company has literally no difficulty with its financial health. Like, it has no financial distress whatsoever. Now, as you guys know, I like when a company has more cash than their debt. And in this case, the company has $400 million of cash and zero total debt. This is huge. I love these kind of companies and I see no financial distress whatsoever for InMode. So this is something that I really, really like to see. Following here, you can see that the company did dilute its shares in 2019, which is understandable, but because the company is still growing. But you can see that from 2020, 2021, and the current quarter as well, they've been buying back shares pretty aggressively. You can see here 17 million, 35 million, and $77 million of share of buyback. So yes, they have diluted, but they're buying back their shares, so I have no worries in this area for dilution. In fact, they're buying more shares. They're buying back more shares, so this is a pretty good sign as well. Alright, so if you're an investor or someone who's looking to learn about investments, this is the kind of analysis that I do in this channel. I look at the fundamentals of the companies and we try to find undervalued stocks in the current market. So if this is something that interests you, feel free to subscribe to my channel so we can live this journey together. Alright, if we now look at the guidance from the management team for 2022, here it says we anticipated that the supply chain challenges will continue, but we are monitoring the situation very closely. And here it says we're maintaining our 2022 guidance, expecting total revenue to be between $415 million and $425 million. And now if we take 2021's revenue, which was $357 million, with their guidance, this would mean that for 2022, they're expecting an increase in revenue of about 16 to 19%. Now, this is a decrease of growth from the past years, but keep in mind that a company can grow at 50 or 60% growth for 5 to 10 years, okay? And this is still mid-high double-digit growth of the revenue for 2022. Now, if you look at the price of free cash flow and the PE trailing 12 months, and you put it into perspective, this is still looking pretty cheap, okay? For this kind of growth, this is still a pretty cheap valuation. Alright, let's now look at the analyzing tool. So for the discount rate, I prefer to have a 12%. Some people prefer 10%, but I like to have a bigger margin of safety. Time horizon, I look at 5 years. Now for the free cash flow growth, we can see that for the past 5 years, 66%, and the past year, 130% growth. Now, I don't think that it's realistic that this kind of growth is going to keep on going for the next 5 years. So I'd rather go more conservative. I'm going to put 10%, 15%, and 20%. Now for the price of free cash flow, last year 35, 23 for the past 5 years. I'm going to go 14, 16, 18. Again, guys, these are my assumptions. I'm going conservative and you guys can have different assumptions. For the shares outstanding growth rate, we saw that they're buying back shares right now. Since I'm going to go conservative once again, I'm just going to put 0 here. All right, so here, even on the low side, the discounted fair value is at 27.86. The mid is 39 and the high is 55. Okay, so the current price is below all of them. So if you believe even this lowest, most conservative assumptions that free cash flow are going to go 10%, free cash flow 14, and no buyback of shares, even though they've been starting to buy consistently, then this looks really a good entry point. Full transparency, I have been starting to buy InMode and it's been in my portfolio now, and I think that the fundamentals are really looking strong compared to what the valuations are, and you guys can even see it here as well. Now let's do a quick recap. So we saw that revenue growth is there, profitability is there and it's strong, financial health is really good. Here we can see it has 400 million cash, no debt, market cap is $1.85 billion, which means that 21% of the company is cash. So if you were to buy the company right now, the whole company, 21% of it is cash. You can just take it as it's in sale of 21%. Okay, all of this together brings me to a cheap valuation. So that was it for InMode, guys. If you like this content and found it useful, please subscribe to join the community, and I'll see you on the next one.